Rich, is Wall Street punishing the stock a little bit too much today?
Yeah, when you look at what we announced and what we talked about growing our earnings next year above our historical guidance at 20%. During the conversation today, we talked about a third of that is the underlying growth of the business, and then there is benefit from the tax reform, and we're putting those dollars into capital that is going to help to continue to grow. This quarter, we grew a $66 billion enterprise by 11%. That was the revenue growth, and so we know there's tremendous opportunity out there. We need to invest to make sure that because of this opportunity, we have the capacity and the capability to keep allowing ourselves to keep growing. Many years ago, our business grew at GDP. Today, there's so much more opportunity.
But you are getting a boon from the new tax regime. You've said you'll use 20% of that on strategic initiatives. What about the other 80%? Why do you need to have the bottom line suffer in the short term when you have all this extra money to play with?
Well, actually, the 80% is coming to the bottom line. So we said we're going to grow our earnings per share by $1.20, and 80 to 85 cents is the amount that's going to fall to the bottom line, or say, again, 80% of the rest we're going to invest in the strategic initiatives so we can keep growing the business. And then the CapEx makes sense because today we get 100% deduction at time of purchase for the next 5 years. We're growing business exports by double digit, so we announced some plane acquisitions or purchases this morning.